let's go over this trade. I really wish that I screen recorded this. I really wish I had screen recorded this. I just really wish I had screen recorded this. So let's jump straight into it, right? Let's jump to the 30-minute level and take some of this off so the charts can look clean and clear. I was trading away from this 30-minute demand zone right here at the break of the candle, targeting this 1 hour liquidity level right up here, right? And what happened was I took a previous trade on a 5-minute targeting this 30-minute level down here. I'm not going to get into that. And so I was down 2% on the day on a $50,000 demo account. And what happened was there was news. If you go to the calendar, this was ADP non-farm employment change at 8:15. It's just 8:17 a.m. now, right? And so just from my understanding of the market and how patterns emerge before, during, and after Red Folder news events, I was able to, as I was in this trade, right? As you can see, this candle right here was 8:10 a.m. and news happened 8:15 a.m. And as you can see, price is trailing down, right? As I was in this trade, right, if we take all these things off, you would see price was sitting right inside this demand zone right here. Price came into the demand, tapped into it, and exactly at 8:15, it blasted down. Had somebody took this trade to the downside, put a sell stop right under that low, or maybe even just entered aggressively, they would have immediately had a one-to-one risk reward, or they could have target the same low right here, which was the 30-minute stops, the 30-minute demand stop level, liquidity level, and right now their take profits would have hit. That being said, those who took this news trade at 8:15, the sell trade at 8:15 for the Red Folder news event, coming from this 5-minute demand up here, would have won. What I'm trying to get into is that I know this happens. This is a strategy of mine that I just don't trade anymore unless it co-aligns with the strategy that I'm trading now. So I was in this trade, right? And I was targeting this 2.7 level. Had I won, I would have made about $1,600 on the trade, and I would have brought the account fully back in profit. If you go over to my MP5, you see right here, this 550 loss was my initial entry. And then on the trade earlier, I took a risk it a little bit heavy and took another entry on it. And I good thing I came on this. I had a buy stop, I had something, and I just wanted to get rid of that. But like I was saying, I took a full 2% loss because I just risked it heavier. When I came back on the same win right here, I was targeting the same 2.7 level, like I said. But because price ran into this 5-minute supply and was setting up, price action was pricing in this the short trade, I knew that immediately 10 seconds before this news event occurred at 8:15, I had to get out of the trade. And the reason why I'm doing this screen recording is because had I not got out of this buy trade to the upside before news, I would have lost. This is something I've seen time and time again, and I'm explaining. When you go on the charts, right, and there's an objective in play, the objective was the 30-minute demand. Let's go on the 30-minute. The objective was the 30-minute demand that I was trading away from, looking for price to expand higher up into this 1 hour liquidity level up here. Because that level wasn't hit yet, yes, the 1-to-1 level was hit. The 1-to-1 level was hit, yes. And because this liquidity level wasn't hit yet, because the 1-to-1 level was hit, the objective could have been said to be done. But also because my liquidity level above wasn't hit yet, this whole entire trade setup was poised for manipulation. And that's what I'm trying to get to here. It was poised for manipulation by using this 15-minute, also this 15-minute demand, because if I draw the zone up here, you would see this is a 15-minute demand right there. And then which price really tapped into clearly was this 15-minute supply. What price really tapped in was this 5-minute supply and broke down. So just understanding and knowing the market and market behavior really well, and really managing risk on the trade like how I did today, that made me very proud. That made me very proud in my strategy, in my risk management, and also with both of my strategies, my understanding of the market and my risk management in situations like this. Because like I said, had I stayed in this trade, I would have lost. But because I knew that during, and after Red Folder news events, certain price patterns emerge that basically that has that pricing in effect, and you can basically anticipate the direction where price is going to go to next. And in this case right here, because the pricing in was effect was from this 5-minute supply, it was clear that price was going to break to the downside at news and target the stock levels of my 30-minute demand buy trade. And so I got it exactly before news was released, and I ended up with a 553 profit. Had I not, as you can see the red dot right up there, had I not, I would have been blasted down. My stops would have been taken out right here. And so that was a good trade. That was a very, very good trade I was able to manage. And yeah, I just want to end this video because that was really, really good. That was really good.